Peter Mcguire, the Chief Executive Officer at Trading.com. And to participate in this conversation with me is my colleague Mehika. Thank you so much for joining us this afternoon, Peter. Thank you. Firstly, I'd like to know, how are you gauging the implications of these tariffs on global trade, especially given how uncertain their nature has been? For example, yesterday we were of the view that pharmaceuticals would be exempted from these tariffs, but today the case has been sort of appended. Give us your thoughts on these tariffs and how do you see it changing international trade?
Well, good afternoon, Malika. I mean, a couple of things. We've got to look through the commentary coming from President Trump and how that's interpreted to the marketplace. First step is what we've seen as far as market correction. We've seen equities punch down. We've seen silver down the best part of 8%. Crude oil's had a very solid move to the downside. You've had US dollar being pressured immensely to the downside, and a lot of those other currencies have had a big push up. And how that's going to be interpreted in the sense of the tariff and the policy, and whether there's any room for negotiation from countries, for example, like India, with a 26% tariff. Is there room to negotiate, and how is all this going to be, I think, unwrapped over the next couple of weeks?
Good afternoon, Peter. Mihika joining this side. Welcome to the show. I want to talk about oil prices. I mean, you've seen a 7% downtick in April itself. We've seen bearish trajectory yes. On the most parts in terms of oil this year. Where do you expect prices to go from here? And are there any key factors that we need to watch out for?
Well, I think so. I think it's been, and good afternoon, I think a couple of things. First off, it just seems very coincidental, doesn't it, that OPEC does a similar, on the same day, it looks at increasing production. It's conscious as far as what's going on with the big picture. And we've seen crude oil prices down nearly 7 or 7.5%. And where we're looking as far as an increase in production, and I think you're going to see softer prices over the next couple of months. There is no doubt that possibly $60 is the new handle that you've got to look at. The consideration where it also sits with crude oil, if you're going to see further moves to the upside as far as more production coming online from OPEC Plus, this is all going to impact, and this is going to be a good sense as far as inflation, and very strong for the consumer.
So are you confident that OPEC will finally increase its production? I mean, historically, they want prices to be higher. Increasing production in a scenario where demand is very uncertain, whether it's from China and now US in the mix. What do you expect them to do post the meeting?
Well, I do think that they will look at increasing production. I think that the other side, of course, is that they're conscious where this could roll as far as the tariff policy. Is there going to be a general slowdown as consumption? And I think they're getting on the front foot and they're taking the necessary action as far as strategy. And I think that with President Trump's also mantra of drill, baby, drill, this is going to also impact crude production globally. So I think that you're going to see softer prices leading into the rest of Q2 and maybe even into Q3 for global crude prices.
Softer crude prices going forward. But speaking of gold prices, Peter, they recently touched record highs but then retreated after these tariff announcements came to play. However, despite the volatility that we've seen with regards to these, this particular commodity, do you think gold would continue being the safe haven asset it is widely called? And how should an investor, like a common man like me, look at gold in such times?
Well, and like me, I think you've got to look at, and I put us both in the same category. India's had such an exposure to gold for not only centuries, but probably millennium. And the man and woman in the street are very conscious all across Asia as far as gold, and it's a flight to safety. And this has been very much the part of what we've seen this year has been tremendous move to the upside for gold. Silver was sold off yesterday, but look, I just think that that's probably just the paper market. The physical market is very, very strong. And there it is on the screen, 3167. That's a record. I feel as though that 3250, 3,250 is the next line in the sand. If it takes that number out, I really do think that you'll see a significant push to the upside. But that's where it's looking at. So many traders are saying, is the market oversold? Is it undersold? Where is the opportunity? But I still believe that gold has got its best time ahead of it over the rest of 2025.
Are you saying that the rally in gold is not over yet and there's much more to come despite what's happening globally?
Yes, I don't know whether there's much more to come, and that's hard to put, in more or less into words. I mean, we've got to be conscious where we were 18 months ago. We had a low of 1,800. We're now at 3,100. I'm not suggesting you're going to see that sort of performance over the next 18 months, but I do believe that there is still further room to run for the price of gold in 2025. Investment banks were saying you're going to see 3,000 to 3,200. We're already there and we're 3 months in. So I think that there will be further upside for gold, and I won't be surprised where it could be by Christmas.
It's interesting that you say that there's further room to go with regards to these gold prices rising in the future, because gold as a commodity is used across different sectors and in different ways, actually, whether it's central banks keeping gold in their reserves or whether it is being used in the jewelry market or anything else you say. So we will keep a track on that. But how do you see the current trade dynamics affecting the value of US dollar as dollar index that tracks the strength of the dollar against a basket of major currencies, sank against major currencies? And of course, globally, trade happens in dollar. With respect to dollar, how do you see this changing global trade dynamics? And do you think there could be a shift from the dollar to any other currency globally going ahead in the future?
Well, I'll answer that one first, and then I'll go back in time as far as the question. President Trump has said that the US dollar will remain the key currency or the number one currency of the world. And I'm not here to suggest any different to what President Trump's saying. So I agree with him. So I think that that's the first part. The second part is the US dollar has been absolutely savaged over the last couple of trading sessions. And now we're at 101 for that US dollar index, and it's had a massive sell-off. Is there a chance that you're going to see lower? I won't be surprised. We've also got, which is interesting, the bond yield, the 10-year is now at 4%. Now, are we going to see that take a further down leg? And that could mean that if it comes down and you see inflation come down as well, these are all factors that are going to impact a Fed rate policy decision. And what does that do to US dollar? So I think we're into a very exciting over this next 3 months for Q2 is going to be a very dynamic time for markets, equities, and of course, commodities and currencies and bond yields.
Peter, lastly, I was reading your mail from early this morning, and, you've spoken about how the dollar index was mainly hit by the, wars and risks around US entering the recession. Do you think that's a likelihood? Because there's a lot of talk on how these worldwide tariffs and whether negotiations take place or not, it could have, could do more damage to US and its consumers itself. What do you think?
Well, yes, and I'm conscious also as far as JP Morgan and their risk assessment as far as a recession, they're saying it's probably around that 60% number. So, that's their forecast, and I've just got it written down here. So that is one to consider. I want to see tonight what's happening with non-farm payrolls. That's going to be a big number to drop. Now, these are all big factors that are coming into play. So again, we've had a most incredible couple of days of trading. And I don't suggest it's going to end right this second. It's going to continue for the rest of Friday, and it's going to be a very dynamic market to look at from a US perspective when that opens tonight.
Got it. Peter, thank you so much for coming onto the show. It's evening where you are, and thank you for giving your insights.
Thank you very much.
Yeah.